Hi, I'm Debi Peverill, and you're listening to the Weekly Tip from Painless Financial Training Group. Today, I am answering the question, what do I need to get my tax return done? So I've been a tax accountant for a really long time. I've had my accounting practice for almost 35 years, and some of the people who ask me this question every year, what do I need to do to get my taxes done, have been filing taxes for many years, but it doesn't seem to be the kind of information that sticks with people. So here we go. The basics of Canadian taxation is that you report all of the income you earned this year. If you think there's some money you made that isn't taxable, I would suggest that you're wrong. The Canadian income tax system is very, very comprehensive, and it's unlikely you're making money that you don't have to report. There is an exception for your principal residence. You have to report that on your tax return if you sold it, the year that you bought it, the fact that it was your principal residence every year you owned it, and how much you sold it for, but you don't have to pay tax on it, but you still have to report it. So the taxable income that most people have, we have employment income, you get a T4. You have interest and dividend income, you get a T5. You have sold some shares, you will get a T5008. Do you have mutual funds? You get a T3. Did you work for people not as an employee but as a subcontractor? That's a T4A. Is there any other kind of income you could have received and you didn't get a slip for it? Likely that would be business income, that you're carrying on business not as a corporation and you're earning income. That will go on your T2125. Then we have deductions. What are you allowed to deduct? Not as many things as you think usually. You are allowed to deduct for RRSP contributions. You are allowed tax credits for medical expenses, and I've got lots of tips on medical expenses. You will get a credit for charitable donations if you made them during the year. You also will get a deduction for childcare payments, and if you are investing, you will get a deduction for the interest on the money you borrowed to invest. And there are likely a few other things, such as if you're paying spousal support payments or if you're paying back money that you paid tax on in previous years. But the general concept is that you pay attention to everything that happened to you financially during the year. The money that came into your business or into your personal account, the money that went out. And based on that, you report on your tax return all of the taxable income you received and all of the deductions. A way to make sure that you don't miss anything, of course, is to use a tax preparer who will ask you these questions. You can also go to our website, peverill.ca, and you will see there that we have 3 checklists. We have one for people who are not in business, we have a checklist for self-employed people, and we have a checklist for people who are direct sellers. You know who you are. That checklist applies to you and not to other people. So bottom line is, it's fairly easy to find out what you need to do in order to get your tax return prepared, and of course you only have until April 30th to do that.